Hello guys, it's yours truly, the Moneynista, 20 years total in audit, accounting, and tax, 13 as a former revenue agent in the large business and international division of the Internal Revenue Service, examining large entities that report 10 million or more in gross receipts and or assets, and the high net worth individuals associated. I am the owner and founder of the Tax Strategies Mastermind, where I teach people to build wealth through the United States tax code, because that's where the wealth is. So let's talk about real estate. I did a video on real estate professional status. If you haven't checked it out, go ahead onto my YouTube channel and check it out. I'm going to talk about the loophole for real estate professional status, because real estate professional status relates to long-term rentals. That means a year or more, and midterm rentals, because there's no specific code for midterm rentals in the tax code. To be safe, midterm rentals are under the same rules as long-term rentals. Okay. And for long-term rentals, for real estate professional status, you would have to meet two very strict criteria. One, over 50% of your work-related time must be involved in real estate rental activities, which most of my full-time W-2 wage earners do not meet. The second is over 750 hours must be dedicated to these activities, so 751 plus hours. Of those 751 plus hours, over 500, that means 501 plus hours must be material. And material does not include travel time. It doesn't include administrative activities. Administrative activities like bookkeeping and things of that nature, that's investor hours. Those are not material participation hours. Material participation hours are things like trash management, lawn care, right? Organizing contractors, gutter cleaning, things that have to go into the rental inspections, supervising renovations, things of that nature. And so if you have a property manager, be very careful, because you would have to prove that your property manager spent less time than you did on the rentals. And that's going to be a very hard fight in an exam. That being said, I've done the whole video on real estate professional status, and this one is for my W-2 earners who are full-time and don't meet the criteria of over 50% of their work-related time, okay? Or maybe you just don't want to do the 751 plus hours, okay? So there is a short-term rental loophole. Short-term rental loophole acts the same as real estate professional status in that it recategorizes your activity from passive to active. Now, we know real estate rentals under Section 469 of the Internal Revenue Code are a passive activity. You have to meet criteria to make it an active activity. What does this do? The same as real estate professional status. It allows you to take losses that are created by real estate, usually as a result of phantom expenses like depreciation and bonus depreciation. Take those losses, which aren't really losses, right? Because depreciation is not a real expense. You don't pay it, or nor is bonus depreciation. But take those losses and now offset not only rental income, but now your W-2 income, your business income, your 1099 income, retirement income, all other active income. Okay. Now, because real estate professional status has such stringent rules, there is a short-term rental loophole. Short-term rental loophole is any property in which you have a customer with an average of 7 days or less, on average, meaning the whole year, meaning you can have somebody stay for 29 days, and then you can have somebody stay for, a weekend, and you can have many weekend stays after that. But the aggregate of the whole year is the average is 7 days or less. Okay. So if you meet that rule, right? And if you are a full-time W-2 and you want to offset your W-2 tax liability and can't meet real estate professional status, which is long-term rentals, you would go the short-term rental route. Now, you do not have to meet the over 50% of work-related time in real estate rule with short-term rental loophole, but you do have to materially participate. For material participation, it is the same as real estate professional status, except you don't need to meet over 750 hours, but you do have to meet the over 500 hour rule. Okay. And that is the same as real estate professional status. You have to have the day-to-day activities included in those 500 plus hours, which means 501. Okay. And as a former examiner, I encourage, even if you're a real estate professional, long-term rentals or short-term rentals, try to make most of your hours, 600, 650 plus material participation. Okay. It's important in an exam, if they decide to take away any hours, you kind of have a buffer. Okay. So in short-term rentals, you just have to materially participate. And one of those is over 500 hours spent in the activity, and you're the only person that is involved. The second one is over 100 hours, and you're the only one involved, including property managers and cleaners, right? I do not encourage the second rule, because again, in an exam, a lot of people, they will feel like, well, 100 plus hours is easy to meet. I'll just, document. People tend to get lazy. Always go for the over 500 rule. This way, if they take away any hours, you can say, I still meet the 100+ hour rule. And again, make sure those activities are dedicated to the day-to-day operations of the rental. Travel time not included. The IRS does not allow travel time in hours for any material participation, as they don't consider it an integral part of the activity. Now, I don't agree, but this is what the IRS has ruled, and I'm here to give you the information so that you don't have any issues and you can offset all of your income. Okay. The last one is you're the one who spent substantially all the time on the short-term rental. Again, I'm going to encourage everybody who takes this route. If you're going to go the material participation route for short-term rentals, 501 to 600 hours in the daily operations. That means between stays, you do the turnover, you do the cleaning. Now, is this tedious? Absolutely. But think about your withholdings from your W-2. Think about your tax liability, right? Some of you have $20,000, $30,000 withheld from your taxes if you take the short-term rental route or real estate professional status. But if you're a full-time earner and you can't take the real estate professional status, the short-term rental will earn you all this money back because you're going to take your bonus depreciation and your depreciation, right? It's going to take this huge expense and create this huge phantom loss. Phantom expenses create phantom losses. These phantom losses are going to offset your real income, your real withholdings. And you'll earn that money back, right? Many of us pay a lot of money in withholdings during the year. So if you can't meet the real estate professional status to get your earnings back, it's wise to go for short-term rentals, especially if you plan on becoming a real estate professional through long-term rentals at some point. You have the material hours under your belt. You know what it is. You know the activities. You have the routine. You understand what's required. All right. So again, the short-term rental loophole is not real estate professional status. It is not considered a rental activity under Section 469. It is considered a business activity, which means they're going to treat it as if you had any other business. And this applies to every business. If you have a t-shirt business, you have a printing press, if you're over 500 hours in the activity, you're considered a material participant. Any losses created as a result of that activity, usually from real losses with real expenses that are over income, or phantom expenses that create losses like rentals, they can offset your actual wage earning withholdings. And that is the best way to build wealth. So join me for my free live training. Visit www.themoneynista.com and you can register, or you can enroll in a tax strategies mastermind. Until then, happy wealth building, everybody.